Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for October 6th, 2016. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. ES continues to coil up right at the center of the current range here that's been developing over the last few weeks. This has been a pattern here that we've seen developing for a while now, especially since we've seen that impulse sell-off move. It's been mostly sideways here ever since the last 4 to 5 weeks. So right now, all eyes on NFP. We have NFP pre-market Friday morning, so that's going to help influence a little bit of the next directional conviction. But as of right now, prices are just kind of coiling up. All pullbacks have been major selling or buying opportunities. So even if we see a sell-off, look for signs that there could be a buying opportunity ahead. And because right now that's the market we've been in over the last year plus here, and even longer. Pullbacks are buying opportunities within the overall uptrending structure. But if there's any failure to get above 2172, that's going to be very significant. And as of right now, the market has not been able to get back above 2172 since the early September time frame. All right, let's take a look here at the intraday time frame. So right now, price is mostly trading within 2148 up to about 2156. We have 1 and 5 day VPOC in that area as well. Overall, prices have traded well within the range here that we expected yesterday. We were looking for a push as high as 2158 to 2160, and we got 58 as the high of the day. And now that we've reached that high, the expectation was for a move back into 2144.75 for a retest. So this is going to be very important when price gets into that area, because that's a zone where bulls have wanted to keep defended. That's an area where bears failed to keep offered, and so we got the squeeze. So I think there's going to be more short-term weakness here into 2144.75, but at some point in this area, bulls want to keep it bid for a return back toward 2158 to 2160. Failure to hold 2144s could open up much more weakness ahead. All right, let's take a look now at crude oil. All right, here's crude in the higher time frame. Crude has been in a very bullish trending market here the last week plus, and it all spanned once we got that major push through these highs here. Breaking through 46 was significant. We had a huge stop run day, and I mentioned that going into 48 was going to be very important to see how price traded around 48 to see if this was going to be real. And so far, it held above 48 with flying colors, and day over day, it has seen higher highs and higher lows, and we've continued to see a very bullish move here. What I mentioned to our trading room was that any pullback could be seen as a great buying opportunity for a continuation into 51.67 to 52, which is recent highs. If this materializes with a push through those 52s, we could see much more strength ahead, as this pattern has been building out for some time now, and this release of energy could be very significant. So right now we've seen a push through 48s. We've seen a continuation day over day with higher highs and higher lows, so that means we should be directionally biased to the upside. If we look at an intraday time frame, for example, you can see right now we're at current cycle highs. Probably not the best opportunity to buy up here. You'd like to see a pullback, and a pullback likely is defended for a continuation. So pullbacks are buying opportunities today, especially into the previous session's high at 49.97. That's going to be the first spot. VWAP has been taken over by the bulls here, and that was in the wee hours, and now that has a very bullish advance to it. So a retest of VWAP could also provide a solid buying opportunity along the way. All right, let's take a look at gold futures. Gold has experienced a major selling spree here. Looking at the higher time frame, you can see the last several days very bearish. One thing that I kind of ran through with our trading room was basically this is the impulse range, and we got that major breakthrough, that 1306 of it, and then that has led to a continuation downward. Yesterday's high was right at the 50% point. That's how we knew 1280 was very important. and holding that high the way the bears did implied a continuation into the 1250s, the 100% expansion target, 1252s, and that's the next key zone that we targeted in our room. The other spot is that this right here, this is the Brexit impulse range. The bottom of the Brexit move is right there at 1252 as well. So we have a high confluence zone in that area. After taking VPOC offered up here at 1323.70, we've seen a sell-off here. So that's usually an indication of a price discovery phase to either create new value or to retest prior value. We have an MC VPOC sitting right here at 1245. So we have some areas down here that we can target very clearly. But again, this is what I mentioned before. Any failure to hold above 1300 not only implies a move into value, but it implies an eventual push into the bottom of the key range, which right now is 1208.30. So that's going to be very important to see how this thing continues to progress from here, but all signs point to more weakness ahead. So the first major bounce could be a great selling opportunity for another round of weakness ahead. Let's take a look at the NQ. The NQ has continued to hold near highs, remains range bound. The range has gotten quite a bit more narrow than it had been. We had seen a very nice range from 4,800 up to 4,890, but now this week that range is shortened from 4,840 up to 4,890. So at some point here with this tightening of the range, you're going to see expansion. And this is what you'll likely see here heading into the NFP report. You may see more trading range activity between 48.40 and 48.90. And then once NFP comes out, you may see price test both sides of the range. For example, if it's going to eventually rally, it may test downward first, reject, and then rally through the highs. If it's going to sell off, then it may test the highs up here, fail, and then sell off. So there's a couple of things to keep in mind, but this is a very narrow range. We can't stay in this range forever. Right now we're coiling into that NFP, and we could see further trading range activity until it comes out. Now, in intraday basis here, let's take this way. Again, we're near the upper end of the range. So the previous week's high has been very important for us this week, 48.85 half, and you can see how the market continues to respond to that area. Rejecting, playing off of it, attempting to hold and failing, and then seeing absorption off of it. So it's been very important here. This is the previous week's close as well. Very important. So rotations right now into this area, the previous week's high and the previous week's close, likely are going to be defended today as price rotates across the range toward 48.35 to 48.40. Any push through 48.90 could be suspect as we head into NFP, and that could be grounds for seeing a fade back toward value in the 48.65s. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session. Good luck and trade well.